Hey guys, this is Jim Keaty with Keaty Real Estate, and this is your 2018 market update. So if you don't have time to watch this entire video, we have the timestamps for each topic in the description below. All right, well, we've got a lot to get into, so let's just jump right into it. So the MLS has reported 151 more sales in 2018 versus 2017. That's a 6% increase in the number of sales. And this is 46 more sales year to date than in 2015, which was the best year on record. So how did our volume hold up? Well, in 2018, our volume, it's outperformed every quarter year over year, and we have $60 million more volume sold year over year, and that's just slightly more than 2015, again, the best year on record for Lafayette Parish. Here's another look at 2018 dollar volume and how it compares to the last 5 years, going back all the way to 2013. As you can see, May 2018 was the best month on record for Lafayette Parish ever, and the next best month was in 2015. Let's take a look at the average sales price year over year, going back all the way to 2012. As you can see, the average sales price has increased in 2018, and this can help explain why there's a much higher increase in the volume or dollar volume than the number of sales in 2018. We're still about $4,000 away from the peak of the average price, which was back in 2015. I would also point out that Keaty Real Estate's average price is around $250, which is about 10% higher than the rest of the MLS. So this next graph shows us the monthly pendings going back to 2013 through September 2018. As you can see, May was our best month in history with 383 pendings. Lafayette Parish only broke 350 pendings twice, and the last time was in March of 2015 with 359. Also, it's good to note that our pendings are up by 56 in September 2018 versus September 2017, because this is a really good indicator of what is to come in the next 60 days. So let's take a quick look at the new actives. So the MLS has reported over 2,000 more listings in 2018 versus 2017. That's 18% more actives. But many of these sellers, they're not just leaving Lafayette, they also need to buy another house, so they become buyers. So the more actives we have, that equals more sellers, and that actually equals more buyers. One way we can get a pulse on what kind of demand and the number of buyers that are out there looking is through foot traffic. We get this data from the centralized showing services, which is a system which all realtors in Acadiana use to set up showings for properties. We compile all the number of showing requests for each month, and this is a great indicator of actual foot traffic, which is demand. In March 2018, we reported a record-breaking 6,000 showing requests. This trend actually continued throughout the summer, and in September was the only month that we actually had less showings than the same month in 2017. But demand is up, pendings are up, and closings are up as well. But are we losing a little momentum? Is our demand falling off a little bit? Something we're going to have to watch and see what happens with in the next 90 days. Here's another look at foot traffic by quarter. The increase in foot traffic indicates more buyers, but with more listings, this also could reflect that buyers are looking at more homes before making an offer. And I can tell you that's what we've been experiencing here at our office as well. Now let's take a look at Lafayette Parish inventory. One way we can get a pulse on how the market's doing is to look at the monthly inventory or absorption rate. So real estate is a function of supply and demand, and months of inventory can give us a gauge as to how much supply and how much demand is actually out there. When we say there's 6 months of inventory, this means that it would take 6 months to sell every single house currently on the market if we didn't list any new ones. 6 to 7 months is actually where supply equals demand, and it's considered a neutral market. Home prices will only appreciate with inflation, and anything greater than 7 months indicates too much supply and not enough demand, and home prices will typically depreciate or decrease. Less than 6 months of inventory indicates a seller's market. Prices are going to increase because there's not enough demand. There's too much supply and there's not enough demand, and home prices will typically come down, and that would be considered a buyer's market. Less than 6 months indicates too much demand and not enough supply and is considered a seller's market. So how's our supply and demand? As you can see, we've been hovering around 6 months of inventory for the last 4 years, and we typically see an increase in inventory towards the end of the year. So let's take a look at the number of listings entering in the market. The MLS has recorded over 2,359 more listings in 2018 versus 2017. That's an 18% increase in the number of listings. But I do want to point out that our month of inventory has actually only increased slightly, suggesting that the new supply on the market is actually meeting the demand that's out there. You know, the perception in Lafayette since the recent oil crash is that there's a lot of foreclosures and people are losing their houses left and right. Well, let's take a look at that and see what the real number is for foreclosures in the Lafayette market. This graph shows the number of foreclosure sales going back to 2007 all the way through September 2018. The foreclosure sales for Lafayette Parish peaked back in Q2 of 2013. Now, we have seen a 50% increase in REO sales or foreclosure sales in 2018 versus 2017, but there's only 29 more foreclosure sales year over year, and we don't see any indication that this is going to change significantly over the next 2 years unless the oil industry recovery is derailed completely. Okay, let's get into the new construction sector. All right, so we started off the year very strong for new construction, but we let off the gas in the third quarter and we ended up with exactly the same amount of sales year over year. MLS reported actually 607 sales from January to September for both 2017 and 2018. And the new construction sales volume showed a slight improvement with 3.4 million or 2% more volume in 2018, with most of that increase in the first 2 quarters of 2018. When looking at the new actives, you can see that the MLS reported a flood of new construction actives in the first 5 months of the year, which could lead to the oversupply in the new construction sector and could actually be the reason for the increase of the days on market for new construction. And when you look at the month supply and demand, you can see that the increase of actives have driven the months of supply up in the third quarter. I hope that this isn't a trend. I hope this is a short-term trend and not a trend going forward. So what about Lafayette Parish existing home sales? Well, first, let's start off by recognizing 2017 was the best year on record for existing home sales in Lafayette Parish with over 2,400 home sales. 2018 has already outperformed last year by 150 sales. That's an 8% increase year over year, with May 2018 being a record-breaking month with 289 existing home sales. Looking at existing home sales volume, the MLS reported 63 million or 17% more home sale volume in 2018 over 2017, May being the best month in history for existing home sales for Lafayette Parish for volume and sales. When we look at existing home sale pendings, the MLS reported 16% more pendings so far this year, and the third quarter actually reported more pendings than the third quarter of 2017. And you can see with this graph that supply equals demand for existing home sales. It's hovering around 6 months of inventory. Overall, the market is very healthy for existing home sales. So we always want to keep an eye on what's going on with the interest rates and where they're going, because it does impact our real estate market. So what we do is we take a look at Fannie Mae, Mortgage Broker Association, and the National Association of Realtors, and we average all 3 of their projections, and we come up with an average. And as you can see, it looks like we should expect the interest rates to increase slightly over the next year. Now, the Fed is expected to hike policy rates again in December and 3 more times in 2019. And the strong employment and the increasing inflation would support these hikes. So what does this mean to the average buyer? Well, if you take a $300,000 house today at 4.5% versus waiting or buying the same house in 2019 with 5.1%, that's going to be approximately $190 difference in your monthly payment, or about $2,300 difference in a year. But over a 30-year payment, that could end up costing your buyer, a buyer, up to $70,000 in additional interest payments. If we take a look at a $300,000 house in today's market at 4.5% versus waiting and buying the same home in 2019 with 5.1%, that's going to be approximately $190 difference in monthly payments, but over 12 months, that's a $2,300 difference. And if you go out 30 years, which is the average amortization for a house, that could be $69,000 of additional interest paid. We turn to the Louisiana Economic Outlook for 2019 and 2020 by Dr. Lauren Scott to see how's Lafayette doing and what should we expect in the next few years. So in his Economic Outlook report last month, Dr. Lauren Scott mentioned the hammering hasn't stopped, but hope lies ahead. We're projecting that the Lafayette economy will turn the corner in 2019, adding 1,400 jobs, and then move into even a stronger year in 2020 by adding potentially up to 4,900 new jobs. This is based off the assumption that oil prices are going to continue to rise to $80 a barrel. And Dr. Scott and his team provided evidence that we could see oil prices rise to $72 a barrel in 2019 and up to $80 a barrel in 2020. According to Dr. Scott, there's every reason to believe that global demand for oil is going to continue to rise. Supporting this view is the evolving growth of two huge economies in India and China. Dr. Scott goes on to say the key to serious revival in the Lafayette MSA is resurgence in the activity in the Gulf of Mexico. Activity in the Gulf of Mexico does respond significantly to movement in the oil prices. However, what offshore investors need to get comfortable about returning into the Gulf is not only higher prices, but a sense that prices are going to continue to be stable and move upwards. And prices have now been rising for 3 years, and we're projecting another 2 years of rising prices. This pattern has already created some evidence of some positive movement in the Gulf of Mexico, which is a great sign for Lafayette real estate. Dr. Scott finishes by saying oil prices rising to $80 a barrel combined with the solid performance of the Big Five, Stuller, Acadiana Ambulance, the Schumacher Group, GCI, and Lafayette Healthcare is expected to generate 1,400 new jobs in 2019 and a more robust 4,900 jobs in 2020. Lafayette's economy is also going to get a shot in the arm from the Lafayette Regional Airport $90 million expansion project, which is coming online in the next few years. Here's the overview of new construction versus existing. New home sales came in exactly where they were last year with no change, but new construction volume did see a 2% increase, and existing homes sold reached a record high with 8% increase year over year. And the volume of existing home sales is up 17% year over year. And here's all Lafayette Parish at a glance. 2018 is looking like a record year. Sales volume is up 11% or 60 million. Pendings are up 12%. It's a good indicator of what's to come. The 6% increase in the number of sales in the market is actually due to the number of lower priced homes. Most of that's in the lower priced homes. And the 11% volume increase is due to the higher average sales price, which is up 4% all the way up to $224,000. May 2018 was a record-breaking month in Lafayette Parish for sales and volume. The existing home sales are up by 8% in the number of sales, but the volume is actually up 17% or 63 million. Demand exceeds supply in the lower price range homes. It's a great time to sell if you're priced under $300,000. However, some neighborhoods in the core of Lafayette, they're lacking supply in all price ranges. Prices under $300,000 are very stable. Demand equals supply. That's where 75% of the market lives. The higher end homeowners or the empty nesters, they're moving down, and the first time home buyers are actually buying because of the low interest rates and the high rents. That's what's creating the demand for the lower end price homes. We're starting to see more upper end homes selling, and average price is actually rising, which is a great indication of what's to come. New construction sales were up by 15% and volume was up by 7% in the first 2 quarters. but it slowed down significantly in the third quarter, and year over year we ended up with a 0% change in number of sales, and volume year over year is up, but only by 2% year to date. Lafayette market as a whole is very strong, but there are many variables. Let us know where you live, and if you'd like me to keep you updated on home values in your neighborhood, give me a call. As always, if you want to keep up to date on what's happening in your neighborhood or a close eye on the market, you can always check us out. We have a monthly report that we publish every month. It goes back 6 months, and you can check us out at www.LafayetteMarketReports.com. I'm Jim Keaty with Keaty Real Estate, and as always, thank you for watching.